On March 18, 2026, global gold prices suddenly flash crashed. Everyone is panicking. But what if I told you the script for this crash was written exactly 46 years ago? Why does nobody look at history? Look at this chart. On one side, the international gold price trend after the 1979 Islamic Revolution. On the other, the gold curve after the Russia-Ukraine conflict broke out in 2022. Strikingly similar, right? History isn't just in the past, it's a mirror. Today, we're going to dig deep into the untold secrets behind this terrifying curve. It's not just the trends that overlap. The major historical events happening along these curves are so similar, it'll send shivers down your spine. Let's break down the timeline. First, the absolute despair brought on by an energy crisis. February 2022, the Russia-Ukraine war begins. A few months later, a massive explosion in the deep sea blows the Nord Stream pipeline to pieces, sending giant gas bubbles to the surface. In an instant, all of Europe falls into extreme panic about freezing through the winter. This is the suffocating feeling of having your energy lifeline cut off at any moment. Now, rewind to January 1979. The Islamic Revolution erupts in Iran, and in a fit of rage, they cut off oil exports to the US and Europe. What did the streets of America look like? Cars lined up for miles just to fight for gas. Gas stations even had to ration fuel based on odd and even license plate numbers. Sound familiar? It's the exact same script. Right after that comes the total collapse of national credit. Once energy takes a hit, trust in the US dollar goes right down the drain with it. In 1979, then-President Jimmy Carter was practically panicking. He sat in the White House and delivered his famous "Crisis of Confidence" speech to the nation. The president of a global superpower, looking exhausted on national television, helplessly telling everyone that Americans had lost faith in the future. Fast forward to 2023. The veteran rating agency Fitch actually stripped U.S. Treasuries of their top-tier AAA rating. That is the equivalent of an official stamp announcing, "The U.S. government is borrowing too much, and its national credit is flawed." Same formula, same crisis of confidence in the dollar. Let's dig deeper. Next, the tension escalated to the point of physical violence. In July and September of 2024, President Donald Trump survived back-to-back incredibly close assassination attempts. What does this mean? It means the suppressed frustration at the bottom of society had started speaking with bullets. Look back at November 1979. The world-shocking Iran hostage crisis breaks out. In both eras, societal tension built up to the absolute breaking point where things had to get physical. And during both of these periods, the price of gold was frantically absorbing this extreme anxiety, accelerating its massive bull run. If you still think this is just a coincidence, keep watching. Because the major powers started stepping into the ring, and the hot wars escalated. In late December 1979, the Soviet Union's steel avalanche rolled straight into Afghanistan. This absolutely terrified the American public. The Middle East oil lifeline was being choked. Soviet tanks were expanding. Was World War III about to start? The US dollars in their hands could turn into scrap paper at any moment. As a result, gold launched its first completely irrational, vertical skyrocketing phase. The skirmishes were over. The real deal had begun. Back to our timeline. In late 2023, the Red Sea shipping route was abruptly cut off by Houthi militants. The U.S. Navy, the strongest in the world, somehow couldn't completely suppress a group of fighters in sandals. Global cargo ships had to obediently reroute around Africa's Cape of Good Hope, with shipping rates jumping daily. Fast forward to June 12, 2025. U.S.-Israeli coalition forces directly bombed Iran's nuclear facilities. This was no longer a minor friction, and it triggered another violent surge in gold prices. Faced with all this, the public's reaction followed the exact same script. You know the old saying, when the cannons fire, gold shines. In June 2024, the people snatching up gold bars at Costco felt like absolute geniuses. Those who missed out stared red-eyed at the daily jumping charts, frantically buying in at any cost. At this stage, gold is no longer just a commodity. It has become the sole outlet for the future anxiety of billions of people worldwide. Look at January 1980. Because trust in the dollar was completely shattered, retail investors in the US and Europe literally lined up down the street to hoard physical gold, creating ridiculous premiums. Gold was pushed to its absolute historical peak at the time. Everyone had this rigid expectation drilled into their heads. Precious metals are just safer than the dollar. But the reality is, every massive tidal wave in precious metals is directly tied to the volatility of the dollar's credibility. If you're watching this and still think it's all a coincidence, I'm about to drop a bombshell. In January 1980, as gold started to pull back slightly, silver put on an epic, borderline insane show. Between 1979 and early 1980, there were two billionaire Texas oil tycoons, the Hunt brothers. They got bored playing the stock market and wanted to pull off something massive, corner the entire global silver market. If there was silver on the market, they swept it up. Out of cash, they used the silver they already owned as collateral at the bank to borrow more money and keep buying. In finance, this is called extreme leverage. In plain English, it's making a fortune out of thin air, and the snowball just kept getting bigger. Fueled by their manic buying spree, the price of silver strapped itself to a rocket, skyrocketing from a few bucks all the way to a staggering $50 an ounce. It got so bad that photographers who relied on silver-based film literally couldn't afford their supplies. Just when the Hunt brothers thought they ruled the world, the exchanges panicked. How could the Wall Street elite tolerate two Texas outsiders walking away with all the money? So, they literally pulled the plug and changed the rules mid-game. The exchange announced, starting today, no more buying silver. You can only sell. And by the way, the interest and margin requirements for the money you borrowed to trade silver? They're doubling immediately. The Hunt brothers were completely blindsided. Their cash flow snapped instantly. March 27, 1980, went down in history as Silver Thursday. The price of silver was cut in half in a single day. Countless bulls lost everything overnight. Bankruptcies and suicides followed. Now, the mirror of history is perfectly reflecting in 2026. Before the gold crash on March 18, 2026, the silver futures market put on another legendary massive short-selling drama on January 30, 2026. The main character in this short squeeze started testing the waters by shorting silver months before the crash. Silver was still surging at the time, and he was sitting on paper losses. But instead of cutting his losses, he aggressively added to his short positions as the price kept climbing. By January 28th, just 2 days before the crash, his short positions had swelled to 18,000 contracts. On January 30th, the exact moment silver hit its all-time high of $121 and the crash was about to begin, while the whole world was crazily over-leveraging on silver, he smashed another 10,000 short contracts at the absolute peak. His total position reached a mind-blowing 30,000 contracts, instantly making him the largest net short on the Shanghai Futures Exchange. Once again, the exchange panicked, using the exact same playbook. The CME Group suddenly announced a margin hike, instantly triggering a death spiral of forced liquidations across the entire market. In this bloody stampede of long positions crushing each other, his paper profits hovered near $500 million at one point. He eventually walked away with a locked-in net profit of a staggering $144 million. And then, we were hit with the massive gold crash of March 18, 2026. Just like in February 1980, gold met its historic, massive downward pivot. The destiny of precious metals always seems to lead down the same path, ultimately plunging into the inevitable abyss they were always meant to reach.